Do you know about the disclosure of tax avoidance schemes? If you don't, you may be losing a good opportunity to save tax penalties.
Imagine this. You paid good money for some tax advice, right? Advice that was supposed to save your business thousands. But what if it was actually a trap? It's a scary thought, but for countless UK business owners, a financial decision they made years ago is about to become a huge problem come 2026.
So let's just ask the question straight up. Is your tax strategy a safe, legitimate plan, or is it a ticking time bomb just waiting to go off? Because I'm telling you, from 2026, the whole game is changing, and the consequences of getting this wrong, they're about to get very, very real. To help us make sense of all this, we've teamed up with the tax specialists over at ProTax Accountant. They are one of the UK's most trusted accounting firms, and every insight we're about to share comes directly from their expert team, all designed to help you stay safe and compliant.
Okay, so here's what we're going to cover. First, we'll look at why these schemes are just so tempting in the first place. Then we'll get into the powerful new tools HMRC is getting its hands on in 2026. We'll also break down exactly what you're legally required to do, see how these schemes are being brought into the light, and then finish up with a practical path to compliance and, of course, how to get the right help.
So you might be wondering, why do so many smart business owners fall into this trap? Well, it all starts with a very simple, very powerful promise: pay less tax. I mean, for a busy contractor in London or a small cafe owner up in Manchester, that's an offer that's incredibly hard to ignore. The problem is, the line between clever planning and illegal avoidance is one that promoters are masters at blurring.
Let's be absolutely crystal clear on the difference here. On one side, you have completely legitimate tax planning. This means using the reliefs and allowances that Parliament actually created for you to use. You know, things like ISAs, pension contributions, R&D tax credits. It's what any good reputable advisor does. But on the other side, well, that's where you find artificial tax avoidance. This is all about using contrived, complicated steps just to get a tax advantage that was never, ever intended. It often involves secrecy, strange offshore companies, and arrangements that just make no commercial sense at all.
And you know, these schemes have some classic warning signs. This is what catches a lot of people out. If an arrangement is promising to pretty much wipe out your tax bill, if it's all shrouded in secrecy, or if it involves offshore structures, you need to be extremely cautious. A massive red flag is when you're told you'll be paid in the form of a loan that, get this, you never actually have to repay. This is what's known as disguised remuneration. And here's a pro tip for you. If a promoter ever tells you their scheme is HMRC approved, you need to walk away immediately. HMRC does not and will never approve tax avoidance schemes, period.
Okay, so why is this all so urgent right now? Well, because from 2026, the entire landscape is changing. HMRC isn't just going to be reacting to these schemes anymore. Oh no, they are being equipped with a powerful new arsenal of tools to shut them down proactively. This quote really says it all, doesn't it? The tax authority is moving into a completely new era of enforcement, one that's driven by data and artificial intelligence. You've got to think of it like a digital detective that literally never sleeps. Every single digital footprint, every transaction is becoming another piece of a much bigger puzzle, allowing the system to flag inconsistencies long before a human inspector even gets involved.
And this isn't something that's just happened overnight. It's been a very deliberate escalation. The Finance Act back in 2022 gave HMRC the power to publicly name and shame promoters. Then, the autumn budget of 2025 announced a sweeping crackdown. And now, the Finance Bill for 2025-26 is where all those announcements become law, giving HMRC a fundamentally new and much more aggressive set of tools.
So what's actually in this new arsenal? Well, for starters, HMRC will be able to issue penalties directly, without needing a tribunal's okay first. That's going to speed things up dramatically. They'll also get something called universal stop notices to ban schemes that are obviously unworkable. Now, stay with me, this next point affects nearly every small business. HMRC will also be using something called promoter action notices, or PANs, which can actually force other businesses to cut ties with these promoters. And their powers to investigate and publicly name absolutely everyone involved, including the lawyers, have been massively expanded.
Let's just pause on that promoter action notice for a second, because this is a real game changer. What it means is HMRC can go to your bank, your insurer, or even the social media platform where you first saw an advert and legally require them to stop providing any services to a scheme promoter. It's designed to completely cut off their entire support network, making it almost impossible for them to even operate.
Right, so with HMRC having all these new powers, what does that mean for you? What are your responsibilities? Because in this new world, simply saying, "I didn't know," is not going to be a defense. The era of plausible deniability for business owners is well and truly over. The rules of disclosure are strict, and the buck ultimately stops with you.
Now, the entire system is built around a regime called DOTAS. The easiest way to think of it is as HMRC's early warning system. It's actually been around since 2004, and its purpose is simple: to legally force promoters to tell HMRC about any of the questionable tax schemes they are marketing and selling.
And here's where most people get tripped up. Let's break down how this chain of responsibility actually works. First, the promoter has to tell HMRC about the scheme. HMRC then issues an 8-digit scheme reference number, or SRN. Then the promoter is legally required to pass that SRN on to you. And finally, and this is the absolute crucial part, you are legally required to report that SRN on your tax return. You see, the responsibility lands right at your feet.
And if you run a company, this isn't just a little box to tick on your main return. The disclosure has to be made on a specific, separate form, the CT600J. This form exists for one reason and one reason only: to disclose these schemes, which basically puts a giant red flag on your return for immediate scrutiny.
And if you fail to report that number on your return, well, the penalty for a first-time failure is £5,000. Let that sink in. This isn't some minor administrative fine. It's a significant penalty that gets even higher for any failures after that.
So how does all this stuff actually come to light? Well, with all these new powers and disclosure rules, the days when these schemes could operate in the shadows are pretty much over. The net is closing in from all directions, and public exposure is now one of HMRC's biggest weapons. And look, this isn't some theoretical threat. This is a snapshot of HMRC's actual public list of named promoters. They are actively naming and shaming companies they believe are promoting tax avoidance. You'll see terms on there like disguised remuneration and umbrella company scheme, which is where a company might falsely claim to employ a contractor just to manipulate how they're taxed. This makes the risk very real and very public, and it can seriously damage the reputation of anyone associated with these names.
Now, you'll definitely want to hear this part. This is a critical warning, and it comes directly from the government's own website. Just because a scheme or a promoter isn't on this public list, it does not mean it's safe. It could just mean that HMRC is still quietly building its case against them. So absence from the list is not a green light. In fact, it's not a light at all. And did you know there's another way these schemes get exposed? Whistleblowers. Yep, HMRC actually has something called a strengthened reward scheme. So if you provide information that helps them collect at least £1.5 million in tax that was being avoided, you could be eligible for a nice financial reward. It's a pretty powerful incentive for insiders to come forward.
Okay, so with HMRC's digital eyes watching and the constant risk of public exposure, what should you be doing right now to protect yourself? Well, the absolute key is to be proactive, not reactive. You need to have a clear plan.
Here's a practical checklist you can follow starting today. First, review your tax affairs for at least the last 6 years. If you find anything at all that you're not sure about, correct it now before HMRC finds it for you. Next, question any advice that sounds too good to be true, because it probably is. Document everything. Keep clear records. If you were ever given a scheme reference number, you absolutely must disclose it. And most importantly, get a second opinion from a reputable, independent expert before a problem ever arises.
And that brings us to our final and probably most crucial point. The world of UK tax compliance is just becoming more and more complex. The scrutiny is more intense, and the penalties for getting it wrong are more severe than ever. Trying to navigate this new landscape is definitely not a do-it-yourself job anymore.
When you add it all up, the new legislation, the AI systems that are watching every transaction, and the huge financial and reputational penalties, the conclusion is pretty clear. The risk of managing complex tax affairs on your own or with questionable advice has simply never been higher.
Now, before we finish up, it's really important that I state the following. The information we've shared here is for general guidance only. You should not rely on it to make financial decisions. It's absolutely essential that you always consult a qualified professional for advice that's tailored to your specific circumstances.
So if you're concerned about anything we've talked about today, or if you just like the peace of mind that comes from a professional review of your tax position ahead of these 2026 changes, the team at Pro Tax Accountant is ready to help. You can contact them directly on WhatsApp or by phone at 07985689912, or you can send an email to info@protaxaccountant.co.uk.
For a more detailed breakdown, you can read the full article on their blog, which is at protaxaccountant.co.uk/post/form CT600J. And for more helpful updates like this, make sure you subscribe to the Pro Tax Accountant YouTube channel. Thank you so much for your time.